So here's what I'm doing. Here's how I'm taking advantage of what I think is the best investment opportunity of my life. I had about a year ago, I started saying the AI revolution is going to make the data revolution look like a non-event. And so I decided I needed to find out who were going to be the players in the AI revolution. Well, first of all, we know NVIDIA, and we thought Supermicro, and it still may. But I identified 60 companies from the chip world, then we go to the data center world, and then we go to the hardware world, and then we go to the software world. And if we'll follow those through, that's how AI is going to be delivered to us, and that's all the integral parts. So I've identified roughly 60 companies, and here they are alphabetically from Apple down to XYZ. And so I said, I got to learn as much as I can about each one of these companies and then how they interrelate to each other, and then predict what the price is going to be when AI is up and running. And I believe AI will be up and running around January the 1st of 2028. So with that in mind, I've been educating myself, and I recognize, as being a financial advisor, a company grows when it has a growth opportunity. And the way you can identify that growth opportunity is, are they growing their revenues? And then subsequently, are they projecting that they will grow their earnings? If you see that, and the rule that the analysts like to use is called the rule of 40. Look that up and you'll understand it. And so then what I did was, with the advent of AI, which has just gotten better and better, and most recently I have incorporated an AI agent, Samantha and Bard, that are basically giving me all the information I need about my 60 companies, and then also giving me access to their financial history and their financial future. And that's what you see here. This whole thing is what I call my tell sheet. But this part of it is I go in and I do an analysis of the financial health of a company. And I then link that there. Then what I do is I create a podcast, which is, again, an AI agent that explains everything in this. The financial health on Apple, is about a 13-page document. And it goes in and tells you everything you need to know about the company, the management team, its future, its past, and from there. Then, as I say, I build the podcast, and then I take a briefing and give you a written document, usually 3 to 4 pages, which is more of a consensus. Now, within this, what I ask is, tell me, based on everything you know, and who is it that we know, all the knowledge that's on the internet. Tell me what you project the price, and Wall Street projects the price of each one of these stocks to be at the end of 2027, or 2025, 26, and 27. And then, what is that return on equity or return on investment from the price of it today? And that's right there. So I'm taking the 290, subtracting the 178, and then dividing the difference into the 178, and that says between now and January the 1st of 2028, Apple will give me a 62% return. And then I do that on all 60 of the stocks. And then I've highlighted, you can see there are some that are giving greater returns than others. So what I'm doing now is saying, okay, and over here I built my portfolio. These are all the stocks. These are the number of shares I currently have of all the stocks, and this is my cost basis. And I say, okay, if I have 100 shares of Apple, and I have a cost basis of 206, and its price is going to be 290 on January the 2nd of 2028, my gain is going to be 41%. Okay? But as you can see, there are some others who are doing much, much better. So Apple is a different case. But for the most part, what I'm saying is, all right, now that we're in this depressed market that is being created by a renegotiation or a frustration with tariffs, and the market is depressed. And over here, I tell you how far it is depressed. Apple is 31% off of its 52-week high. ACLS is 72%. So it's depressed. So now I put those numbers together and say, if I can take my cash that I have, which was about $200,000, I'm now investing it, as I did today, into those stocks that are going to give me the greatest return between now and 2028. And I then come over here and say, okay, APLD, Applied Digital, is selling at $4.90. My cost basis is $5.38. So it was higher than that. I bought another $500, 500 shares today at $4.90, which brought my cost basis down. Now, what I will do as the market starts to recover and some of my stocks go up, as an example, I want to move some money from Vertiv, which is in the air conditioning business for data centers, which says that I am going to get a 64% return above its price today. But I also own Modine, which says I'll get 175%. They're in the same business, they're competition. So I will move my money from Vertiv to Modine as Vertiv recovers, okay, and gets closer to my cost basis, because what I want is more money in Modine where I get a larger return. So that's how I do this. Now, what I want to share, because I'm in a better position. You know, first of all, I'm retired. I can spend time with this. I have the money to invest in the AI agents. And I've learned to create a prompt that will give me basically what I'm after, APLD. And again, it's a small company. It's in North Dakota. But a very major lending institution came and lent them all the money they needed to finish 2 more data centers, and so that they could buy all the NVIDIA GPUs that they need so that Microsoft will come and become one of their major users of their data centers. How do I know this? Because I did the financial deep dive. And again, these deep dives, these AI platforms have access to all the financial information about Applied Digital in the world. And it can, if I ask the right questions in the right manner, I can extract this information. Who'd they get their money from? Who are they? Is that a confidence builder? I mean, if Jamie Dimon invested $5 million or $50 million into APLD, would you say, hey, that sounds like something I ought to follow? Well, that's what I'm doing. I'm getting in and I'm pulling the covers away and looking at the naked bodies of these stocks and say, do I want to get in bed with them or not? And their answer to the question is right there. Yeah, based on the information I have, if I put $1 into APLD today at $4.90 a share, that dollar is going to be worth $4 in 2028. That's how you invest, with knowledge, with information. I want to make that available to you. I'm fronting the money to get the hardware and the software to make this possible. I'm asking you to share in the cost. When it's all over and done, my investment is going to be in excess of $200,000, because I'm paying people, I'm buying equipment, I'm buying software, and I'm going to charge right now, today, it's $29.95. A month ago, it was $19.95. That's what gaining access to this was. In the future, I don't know. because I don't know what I'm going to have to pay to keep up. If you want to be a part of it, today I'll lock you in at $29.95. So what I wanted to do today was educate you on what I'm doing, and then giving you the opportunity to take advantage of it. If you don't, that's okay. But don't come crying to me on January the 2nd of 2028 that I didn't buy Applied Digital. I didn't move my money from Vertiv to Modine. It's all here, and I'm serving it to you. Okay, got to go. I just finished an analysis of Microsoft and its profits and how it compares to Google and Amazon and their delivery of AI. So I gotta absorb that and then finish my program or my deep health, and you'll see it. It'll show up. Let's see, right, Microsoft. MSFT. It'll show up right there. And you'll click on that, and it'll take you to the document of the financial health of Microsoft. Okay? It's that easy.